Well, I just think it remains to be seen. I mean, we've had a big V-shaped move in equity markets since the peak of activity in March on the down move, and what has that been on the back of? No real sense of economic
Yeah.
recovery at this point in time. No sense that things are better than what they are. Yes, of course, we seem to be peaking in terms of the coronavirus epidemic, but the economic numbers have hardly suggested that we're in recovery mode, even in the near term. So the buying of the equity market is probably as much a relief in terms of risk, not so much risk on, but less risk off. So I don't see necessarily this as being an appetite to get on. And if you have a look at valuations, I mean, we're down to flat against the year for Nasdaq. On some of those stocks are at still at all-time highs. S&P's only down 9%, so we've already had a pretty good bounce. So to get on board and take an even more aggressive view now, I think would be quite optimistic.
Okay, so bearing that in mind, what are your top defensive plays then?
Well, I think interestingly, I think gold obviously is a great defensive asset, and across the sectors that are going to benefit the most: staples, healthcare, utilities, as government put more into infrastructure as well. They tend to be the areas which will be likely to not only perform better. Admittedly, they've already probably absorbed a lot of the move, but ultimately will be safer investments on the defensive side. And then potentially you would start re-looking. If you feel that ultimately there is some positivity coming back, you might look at financials that have really underperformed. They may in fact come back, but I think it's still too early to say. There's a lot of water to flow under this bridge before we can be confident that we're going to get any meaningful recovery in the short term. And very much, I think, too early to say we're going to get a V-shape.